Hi guys, so this is a payroll register that looks familiar. Uh, what we do is we have to record a journal entry to recognize the expense for the gross pay. And what we do then is come over to the journal and debit salaries, ARIES, and wages. So that's going to be an account in the ledger expense. Okay, I'll abbreviate if you give me the opportunity to do so. So you want to put in always the gross pay, 2480, and then each deduction represents a liability. These are amounts that the employer is withholding from your pay and is obligated to pay, in this case, the IRS, and in this case, too, the federal income tax, the FICA taxes. They don't break it down, unfortunately, between the OASDI and the Medicare, but if they did, we would have to split in reality, we split the liabilities, but just consider this a condensed type version. So that we'd want to type in FICA payable. We'd want to type in FICA payable. And we put that amount in as a liability. So it's 198.40, 198.40. And then we'd want to take the federal income taxes payable. So we might want to be specific about calling that employees federal. I'll put FIT, federal income tax, and be sure you type in you're dealing with liabilities, so you're going to be working with payable accounts. All right, so that's going to go down as 240. And then the state income taxes, which we showed in the previous video, they have to also monthly, however often, have to be remitted to the state Massachusetts here Department of Revenue, so that call that we'll call that state as you can see, I'm no rocket at Word or anything. 7440. Okay, so that we've got, let me put 2 zeros there, get it aligned up. Okay, and then you've got a United Fund. That's a voluntary deduction. People make pledges to charities, and the employer acts as a go-between the employee and will once a month or once a quarter make the remittances to the fund itself. So that we'll put that United Fund contributions. Again, there'll be a ledger account set up. United Fund contributions payable. Now, mind you, these are liabilities because your boss is holding your money. Your company is holding your money and is obligated, right? Has a liability to pay this money to the various governments and or organizations. $23 for this pay, and then the typical, which will end up going to cash, will be the net pay. Okay, we know the formula would be to take the total deductions. They didn't label that, but like we showed in the previous, if you took the gross pay of 2480 minus the total deductions of 535.80, you'd get the net pay of 1944.20. So typically that is credited first to SALARIES and wages PAYABLE. And then what we do is typically we would take that net pay of 1944.20, 1944.20, and what we would do with that is transfer a check into a payroll checking account uh, and grab the money out of our regular cash account and put it into a payroll account, so that we would generally, right after that first entry, the whole processing would be to take that salaries and wages payable account, okay, and kill that with a debit of 1944.20.20, and this is a check which we're going to grab from our, I'm going to be specific, cash in bank. That's going to be our regular checking account, which we take the money, we draft the money from our regular checking account, and we basically transfer it to a separate payroll checking account. So that's the same amount, 1944.20. So there you are. So that money gets transferred electronically or otherwise to a special payroll account, and whether it's done internally by the company or externally, the individual payroll checks are issued from that special account that we are transferring this money into. So that we're going to be cutting 1, 2, 3, 4 checks, and then what happens is that checking account, that special payroll account, it goes to zero, and that should be the case as long as people cash their checks. Okay, so that's a in and out. That payroll account should be an in and out. We set it up, and we transfer, whether it's weekly or semi-monthly or bi-weekly or monthly. We make a cash transfer in for the net amount, and then we cut the individual checks from that account to the various employees. So, and we would have a supplementary record of that. Now, mind you, I didn't talk about the individual employee's earnings record, but every time we prepare a payroll register for a specific payroll period, we have to make a posting, it's done electronically, to keep a track of how much each person earns, how much is withheld for the various taxes, how much they were paid, gross, deductions, and net. So the same information for each person that you see here is transferred to a record called an individual employee's earnings record, which you will see in the text. Probably the most important reason for keeping one of those is we got to issue the W-2s by January 31st after the calendar year just ended, which will, of course, you know, the W-2 is a wage and tax statement that the person must use when they file their tax return, their 1040. Plus, there are quarterly split-offs as well for the filing requirements of the 941, which you see in your textbook, which addresses the payment to the Internal Revenue Service of the combined FICA liabilities as well as the federal income tax. You look at your Form 941 in the book, and you will see that it is a tax return that is required by law to be filed on a quarterly basis. So that what we will have is we'll run individual earnings record and then summarize all of the taxes that have to be paid along with the filing of the 941 if they haven't been paid yet. Typically, these taxes could be paid as often as 4 or 5 times a month, depending on the amount. But no less frequently than a quarter. These guys have to be paid, depending on the amounts. Could be a couple of times a month. It could be 4 or 5 times a month. It could be once a month, or it could be quarterly if it's just a small amount of money. So these amounts get paid. It's pay as you go, and then the 941 usually comes out to zero due because you've already paid in to a bank intermediary that collects the money on behalf of the IRS. Okay, that's it for now.